Hi, my name is Ala Izzati, PC25135. So, good morning everyone. Today, I would like to present a local food businesses called Apam Balik, owned by Roslan bin Awang. This business has been operating for about 20 years and is well known for its delicious taste, good quality and affordable price. Apam Balik is a popular traditional Malaysian snack enjoyed by many people. The business operates from 8 a.m. until 1 p.m. and despite the short operating hours, it is continued to receive good customer and remain successful until today. Thank you.
Hi, my name is Fatin Abdul Razak, PC25068. Next, I will explain about our cost structure. Our costs are divided into fixed costs and variable costs. For the fixed costs, it includes business license, machinery depreciation and equipment with a total of 403 ringgit and 60 cents. These costs stay the same even if the production changes. Next, variable cost includes ingredients and packaging such as flour, eggs, evaporated milk, gas, and plastic. The total variable cost is 2,716 ringgit and 85 cents. Based on our calculation, the total cost per unit is 2 ringgit and 11 cents. This helps the business control expenses, set the selling price and estimate profit more efficiently. Thank you.
Hi and Assalamualaikum. My name is Afifah Liana and I will continue our presentation. So, I will be presenting the break-even analysis for the Apam Balik business that we researched, looking closely at the data shown on image. As you can see from the data table in this image, this business operates with a fixed cost of 403 ringgit and 60 cents. They sell each unit of Apam Balik at 3 ringgit 50 cents, while the variable cost to produce one unit is 1 ringgit and 84 cents. This gives them a contribution margin per unit of 1 ringgit and 66 cents, resulting in the contribution margin ratio of 63.19%. This indicates that significant portion of each sales directly contributes to covering their fixed overhead costs. Based on the calculations, the break-even point for this business is approximately 243 units, which translates to a break-even revenue of around 638 ringgit and 70 cents. Looking at the graph in this image, this intersection is where the blue total sales line crosses the orange total cost lines. Once they pass that 243 unit mark, their total sales outpace their cost, showing that the business model becomes quite profitable as volume increases. The business is currently in a very strong financial position. By keeping the price at 3 ringgit 50 cents against a low variable cost at 1 ringgit 84 cents, the business achieved a high contribution margin ratio at 63.19%. This means that for every ringgit earned, over 60 cents goes directly toward covering fixed costs and generating profit. Furthermore, because the profit margin is so healthy, the break-even point is remarkably low at just 243 units. As shown in the graph on image, the blue sales line quickly climbs above the orange cost line. Because Apam Balik is popular everyday street food, raising the price above 3 ringgit and 50 cents might push it out of the typical market rate, driving sensitive customer away and reducing sales volume. Maintaining this price keeps the product competitive and accessible while ensuring excellent profitability. That's all from me, and I will pass to the next presenter. Thank you.
Assalamualaikum and hi. My name is Nurfadin Sakinah binti Kasim. My matric number is PB25042. Today, I would like to present about profitability analysis from Apam Balik business. First, the total fixed cost of the business is 403 ringgit and 60 cents. While the total variable cost is 2,760 ringgit and 85 cents. Based on the cost, the total cost per unit is 2 ringgit and 11 cents. The product is sold at a selling price of 3 ringgit and 50 cents per unit, and the business is able to sell approximately 1,500 units per month. For analysis, the business generates a monthly revenue of 5,250 ringgit. The total monthly cost for the business is 3,165 ringgit. After deducting the total cost from the total revenue, the business earned an estimated monthly profit of 2,085 ringgit. In addition, the profit earned for each unit sold is 1 ringgit and 39 cents. In conclusion, the business is profitable because the selling price is higher than the production cost per unit.
with a monthly profit of 2,085 ringgit and a profit of 1 ringgit 39 cents for each unit sold. The business shows strong financial performance and has a good potential for continuous growth in the future.
Good morning, sir. My name is Kavya Balamurgan, metric number PB25176. Today, I will present the strategic for the business we interview, Perniagaan Apambalik. Based on our analysis, the total fixed cost is Rm 403.60 cent, the monthly variable cost is Rm 2760.85 cent, and the cost per unit is Rm 2 ringgit 11 cent. Since the variable cost is much higher than the fixed cost, the business should focus on controlling raw material usage and reducing wastage. The first strategy is to reduce raw material wastage, especially for egg, evaporate milk, bread flour, corn, and salt. This can be done by using exact measurement, storing ingredients properly, and monitoring daily stock usage. The second strategy is to buy ingredient in bulk from wholesalers and compare supplier price regularly to reduce cost. The third strategy is to increase production volume because higher output can reduce the cost per unit and increase profit margin. The fourth strategy is to monitor monthly variable cost trend to identify price increase and seasonal changes. Lastly, the business can reduce non-essential fixed costs by reusing equipment and maintaining asset properly. Thank you.
Good morning everyone, my name is Nur Adani Ilya binti Roslan. My ID matric PC25128. This slide shows the benefit of using a systematic costing system in our business. First, it helps you calculate the actual cost of production each unit accurately. Based on our analysis, the production cost per unit is 2.11 ringgit. Second, it helps you set a suitable selling price. Since we know the production cost, we can set the selling price at 3.50 ringgit per unit and ensure that we make a profit. Besides that, with the costing system help you control costing better. We can identify which item contribute the most to production costs, such as raw materials and packing, and find ways to reduce expenses. It also help you make sure profitability. From our calculation, the profit net for each unit sold is 1.39 ringgit. Finally, the costing system helps you determine the break-even point, which is 243 units. This means we need to sell at least 243 units before we start making a profit. In conclusion, a systematic costing system helps you manage cost, set the right price, make sure profit, and make better business discussion. Thank you.
Okay, so that is the evident photo that we got from the owner.
I just had to let you know you're. She a happy baby, she